How's it going, guys? Welcome back to mentfx and welcome to the third section and subsection 1 of the main crux of this entire strategy, that being Wyckoff and understanding Wyckoff in ranges and areas across time frames across all markets. So again, hopefully throughout this entire thing you are taking notes. Do not be skipping anything because each and every single thing that I say throughout each section and each subsection is important in one way or another. The first thing we're going to start off by understanding very quickly concerning Wyckoff is one, that Wyckoff occurs everywhere. We're going to talk about that a little bit more, and we're going to make that more understandable very soon. As a lot of you know, if you were here for the week of the recording of this, you know that we caught all these moves here, and every single one of the moves that we caught here, if we just kind of go to the 1 minute and work through this week alone. So if any of you remember, this right here was the 23rd, this right here is the 26th, and throughout this entire week, we've been able to catch all these moves here, all the moves intraday. I don't think there was one here. Maybe there was, I don't remember. Maybe I even took a loss here. All the moves in here, all the moves in here, even the sells, some buys inside of there. Like, it's kind of hard to see, but if I zoom in, you'll see we had multiple back and forths, some sells here, some buys here. And the reason and some buys here as well. And the reason that we were able to get involved in many of these buys is because of the fact that Wyckoff does occur everywhere. Now, the idea of Wyckoff from its very, very get-go is that it's less so its own thing, but more so, and again, bear with me for a second, but it's more so a combination of everything that we understand from a smart money sense. So as you work through these sections and you understand that we have the manipulation of liquidity, we have structure being put in to the market, we have order flow that is being maintained, right? So for instance, as you remember in the first video, when we spoke about multi-level structure, we understand that the reason many of these highs and lows hold are not because they're just making higher highs and higher lows, but it's because in this bearish specific market on this specific time frame, there are too many orders that they have on the bearish side of the market that there's no reason for them to get out of them, thereby no reason for them to get above certain points and certain lower highs in the market as those lower highs are put into place. So Wyckoff itself is a mixture of structure, of supply and demand, areas left behind that are being mitigated, and the manipulation and liquidation of potential liquidity. And what we do is we put that into multiple schematics that help us understand where a price is undergoing this certain type of thing, and using these schematics, look for potential ways to be involved. Now, there are multiple ways to be involved in a Wyckoff schematic. They can place from something as simple as selling the entire validation of a schematic to something as complex as multiple mentfx block confirmations within the schematic, to as complex as multiple mentfx block confirmations within Wyckoff confirmations, within other Wyckoffs, within higher Wyckoffs, within lower Wyckoffs, so on and so forth, okay? So there is a lot that can be done with Wyckoff, but the actual understanding of Wyckoff is actually quite simple once we actually work through it. So what I mean by that is you need, before you start any of this section, even if you've done smart money before, to start yourself with the entire section 1, working your way through understanding structure from a standpoint of overall order flow institutionally, right? Based on the time frame you're looking at. So as you remember, if we were looking at 1 hour, we understand that yes, even though there is intermediary structure in between price, right? So this is kind of like a bearish price action. You could maybe think that this was a break of structure, when in reality it was just a larger pullback, which was part of an even larger order flow pullback, right? So you might think this is bearish structure right here, which it is, candlestick wise, right? This is all bearish structure, and this could be a break of structure, which even I said it was, and there are buys that were available in here, but this entire pullback right here with all the break of structures within it, right? Even right here. So these are all candlestick based structure. Until about this point was all a larger pullback on behalf of larger institutional order flow, because order flow does not only become represented to us by way of candle structure, but also by way of overall structure that also is basically drawn out with the idea of mentfx blocks like we studied in the structure points. So again, you need to see section 1 and understand that, for instance, this was a mentfx block right here that caused this next mentfx block right here, which caused this next mentfx block. You could argue this one right here, right? That came to test this one. So you can see how we're following down, which might now be the cause for the next potential mentfx block that might be here. Now again, this mentfx block might start, this price action candlestick wise, even on a lower time frame, may already start to be bullish, which it has multiple times. That's why we were able to catch all these buys despite being wrong about the direction and the direction continuing to be bearish. We were able to catch all these buys inside because of the fact that we understand that candlestick structure can change within ranges, and as a result we can have certain areas and mitigations that show us signs of accumulation distribution, which are Wyckoff. Now again, all of this might seem a little bit complex right now, and that's okay, especially if you don't understand what I'm talking about, because we will go through this step by step and understand how these ranges form, why they form, how these mitigations can be predicted, and how these mitigations can be analyzed by way of potential accumulation or distribution. Because like I said, every section that we've gone over so far isn't for fluff, isn't for just some dumb reason. It's because every single one of them play into the understanding that you're about to have on Wyckoff. Now, Wyckoff itself, let's talk about it from a very, very basic perspective. As a lot of you understand already, price will be delivered to us by way of a certain structure. Now within that structure, okay, order flow structure, in the sense that we are putting in, for instance, lower lows, lower highs, right? Lower high being expected. So even though we know that we're looking at bullishness on this because of the weekly and whatever, if any of you just want to see it really quick, because we're still looking at potential bullishness that comes to take out more weekly things, if we're studying the actual price action on an hourly time frame, we can agree that overall candlestick structure is most likely breaking down bearish, which it is, with intermediary structure that breaks higher, as well as order flow structure, which is breaking down bearish. Now, when we have, for instance, bearish order flow, what we will usually do is undergo multiple areas of distribution where we manipulate highs, right? So the idea of that is we will create highs in the market, manipulate those highs, right, and break lower. And this ultimately, if you think about it from a standpoint of anything we've spoken about so far, is the same as bullish structure being put into action, that bullish structure breaking down by way of a shift in the market, right? So this would be considered our break of structure, candlestick wise most likely, and it could be considered maybe an order flow wise break, right? Because this right here is order flow, right? So remember, we're always thinking about multiple levels of structure. This is order flow structure, which is also based on, as you know, the mentfx block, mentfx block, and now potentially we have a new mentfx block, and we continue breaking that down if we want to come into deeper areas of this demand zone on the higher time frame. But at the same time, we also have candlestick structure. So even though on this 1 hour time frame we have this multi-level structure which is being delivered like so, we also have this bearish structure right here, right? This all bearish structure that shifts bullish for a second, which then shifts bearish again, which then shifts bullish again for a second, which still shifts bullish and remains somewhat bullish, but actually you can see that it never got above here, above this high right here. You can see that never got above it, because after it made the real shift, it continued that bearish shift lower, and now we're in again a bearish shift lower on the candlestick wise. And again, the candles may come and make a breakthrough here, but that does not mean we're going to be fully bullish. And what it could mean is we're just making a bigger pullback by way of bullish candlestick structure to this overall bearish structure. And what's going to happen at areas like this, we're going to see this type of thing occur right here. Okay, now when that thing occurs and we get, for instance, this break of structure, what's actually happening from a standpoint of just section 1 and section 2 material is we're putting in new breaks of structure as well as new potential unmitigated supply zones that will exist in these areas here. And again, as you know, we can refine in these areas here or something of that sort. And the idea is that we're going to get a pullback. We're going to get a pullback of some sort that comes back to these areas of supply, because what's happening at those areas, there are unmitigated orders, especially when we leave behind something like an imbalance, since we need to fill in those orders on behalf of the composite man institutions. And as we fill in those orders, whether it's here or here, so again, this is the idea of picking one or the other, but overall, it's part of a larger order flow mentfx block. So that's the idea of everything we see here, mentfx block, so on and so forth. We see those get filled, as you can see, and then we can see the breakdowns, okay? And same thing here. If we get this break right here, as we get this major pullback, we can have price make its way back up into a potential supply zone that we have drawn on based on section 2, right? And also based on section 1 with mentfx blocks, which are just bigger supply zones. So again, make sure you review this step by step. And I know that I might be going over things and being repetitive over certain things, but this is all going to be very helpful for you. And if you are able to watch this and understand what I'm saying, then that's going to make it even better for you, because after all, you want to learn this stuff and you want to understand it to the best possible way, because the only way you're going to be successful in this market for the most part is when you understand why you're doing certain things. So We're going to have this pullback of some sort, and then you're going to have the breakdown, okay? Now, what's actually occurring when you see something like this happen, right, is Wyckoff. This is what is known as Wyckoff. Now, the reason that I kind of laid off on the Wyckoff until the very end is because Wyckoff is nothing more than its own mini schematic or explanation for the things you already understand, which is as simple as understanding that you have structure that is put in, and you have structure breaks that are going to be resulting in lower prices. Now, as you have that, you're going to have certain areas of supply left behind, of supply left behind, of demand left behind, of demand left behind, where prices will come to mitigate, create liquidity, take that liquidity out, and after it shifts structure, break a structure right here, right? Break a structure right here, it will continue to shift lower. Now, when that happens, ultimately, you are undergoing distribution, okay? Or in the other sense, when you have prices coming down, lower and lower and lower and lower, right? Maybe a hiccup in price, right? The last move down, making it look like it's still bearish structure. The move up, breaking structure, right? Leaving behind demand zones, multiple potentially, or just one with imbalances potentially. So we can have like a demand zone here. Oops. So we can have like a demand zone here, for instance, with a imbalance left behind in here. And you have the move back down that fills the inefficiencies, maybe makes some more liquidity, fills that liquidity, fills that inefficiency, grabs the demand zone, thereby filling in orders that were unfulfilled and mitigating orders that they don't want to have anymore, and completely shifting structure again, right? And again, as structure shifts, recall back to section 1 and section 2, we may have structure that shifts like so. The breakdowns, right, that may look like candlestick structure is breaking, but then continuations. And this is because why? Candlestick structure is being delivered like so, and there are breaks of structure in candlestick wise, but mentfx block wise, right, or even multi-level order flow wise, this is nothing more than a deeper pullback into a prescribed larger time frame bullish structure, right? So again, you have to always be wary of the fact that you have price that switches back and forth between candlestick structure and order flow structure, okay? Those are two main things. And how do you tell order flow structure? Using mentfx blocks or using your eyes. And how do you tell candlestick structure? Using what you see in here, right? It's literally looking at the candlestick movements within price. That is why people can get very confused concerning some of this stuff. So the reason we speak about this before we dove into all of the Wyckoff stuff and understanding Wyckoff for confirmations and any of that sort of thing, right, is because you need to understand that Wyckoff is nothing more than what you already understand put into a more understandable schematic, okay? You already, from everything you have learned through me, understand that price is going to be delivered to you bullishly or bearishly, right? Or consolidated, but ultimately you'll still be in some kind of bullish move or consolidating in some kind of bearish move, right? It will be delivered to you in a certain way, like so. Now, when it's delivered to you like so, you are going to have certain beliefs about price. As it continues to break structure, you're going to have beliefs about certain areas of price in which there will be, for instance, demand zones that you are already expecting for price to come into and then continue higher. Now, part of that is understanding that order flow overall, right, is moving in a certain direction, and that most likely you're going to have mitigations at certain demand zones from which you can be a participant at. And when you're looking at those areas to buy from, you already understand that within the confirmation of this zone, so if we look at that on a little like zoomed in chart, right? If you look inside there on a lower time frame, what you're usually going to be looking for is the same thing. You're going to be looking for structure that's coming down lower, right? Structure's doing some certain thing. The liquidation of potential lows, right? Because what we're doing is we're looking for orders to be put in the market. People that are FOMOing in get liquidated, and then you have real moves that are put into price action, forming your potential new order flow. And as a result, we get the test of those areas of demand zones, potentially here or even here, right? So there's multiple demand zones, and then you have the continuations up, and then you have the mark up, right? And we become influenced in trying to get involved on these pullbacks here, getting involved in that, right? On new pullbacks, maybe we don't get in because we're expecting something to come here and it doesn't come, keeps going higher, comes back one more time into a new demand zone here, where we finally get what in here? The same thing we see here, confirmation of some kind of mentfx block based confirmation or multi-level structure break confirmation. We get involved on that and we have the markup again, right? And this is ultimately how a bullish trend can be caught. Now, again, as we do this, you understand that what you're looking for is ultimately the liquidation of lows or the shift of overall structure. When that happens, we're actually undergoing what is known as Wyckoff. So I think this will function as a nice introduction video to the fact that Wyckoff is nothing more than everything you've been doing. However, it's going to be given labels and a schematic to your own understanding. So you can use it, of course, if you want to, or you can refine a system that acts along the lines of supply and demand zones forming, supply and demand zone 2.0s forming, mentfx block shifts in price forming, and overall order flow and candlestick structure forming at certain POIs, right? Because your POIs are determined by structure and by those demand zones that you have highlighted where you're expecting a certain number of things to happen, okay? So this is going to function as the first video for Wyckoff, even though we haven't necessarily covered overall Wyckoff. And in the future video, in subsection 2 and so on and so forth, we will dissect Wyckoff in a much deeper sense to understand what every movement of it means, how it's important, and why we use it. So I will see you guys in that video in a second. All right, so I'll see you guys then. Make sure you take notes, by the way. Thank you.